The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
There are two service companies, count them two, that are on the aggressive growth fast track. And our aggressive growth stock strategist, Brian Boland's going to tell us more about each one. I don't know if we've talked about these before, you and I, but LPL Financial does look familiar to me.
Well, LPL Financial, is kind of a big name in the financial services industry. So at some point, and we're kind of in that industry as well, we end up to cross paths here and there. Mm-hmm. A lot of stockbrokers back in the day that might have worked at Merrill Lynch or any other, investment house, give it a name, have probably ended up here. Because of their structure.
When they called them stockbrokers.
Right, back when they used to be stockbrokers. Now they're much more considered asset managers, right. Investment consultants.
Right.
Semantics, Terry, right?
Hey.
But we like this stock because it is a Zacks rank number one, and that's a strong buy. And it has the growth style score of B and a value style score of B as well. And normally I don't like that because I like to see the divergence between a growth investor and a value investor. Mm-hmm. But the stock, also has some other issues here. It's been hit and miss on earnings. So before there was 3 misses in a row, now that there's 2 beats in a row, so that's pretty good, but it's still kind of a hit or miss situation. And then more recently, there's been talk about the company selling themselves. So that has, brought the image, more to life, or at least, brought some more risk in at play here.
Despite all of that, though, it is a strong buy.
It is a strong buy, and a 17 times forward earnings is somewhat reasonable given the historical market multiple average. Mm-hmm. We see the stock, bursting up here to like 32.50. The talk of the M&A is what caused that spike higher than 32.50 on the chart there. So, whether there's a deal here or not, you don't really want to be buying a stock in hopes of merger, or acquisition happening. But there are some other good fundamentals here. Obviously that valuation is pretty good for them.
All right, and then this other service company is actually a staffing service company, Manpower.
Right, Manpower, staffing company. So when people are looking for warm bodies to do difficult jobs, Terry.
Fill chairs.
Fill chairs, right?
Right.
I can fill a chair. Manpower might be calling me soon. It is a Zacks rank buy. And again, this is another one with the good growth style score of B, but a value style score of A. Again, not normally what I'm looking for, but I like this for a different reason, which I'm going to go into in a minute. But earnings history, it's been stellar. 28 quarters in a row of beating the Zacks consensus estimate. 28 quarters. Terry, how?
I think it was 28 quarters.
28 quarters. So how much money is, or how long is 28 quarters, or how much money? Either one.
It's 28 quarters.
$7 or 7 years, right? 7 times 4, 28. 7 years
we'll take
where
your
they
word for it.
Haven't missed the Zacks consensus. That's kind of remarkable.
Yeah.
The idea of why I like Manpower, though, is this thing of the higher minimum wage and then holiday hiring. Obviously, there's a big burst of holiday hiring right now. The minimum wage out there idea is making everyone else's wages increase except for yours and mine. I'm guessing yours.
Oh yeah.
I know mine is staying the same.
Yeah,
or going down.
But I've got enough money until I die, provided I die next week.
Okay. Don't die next week.
Okay. Let's
stretch it out a little bit further. So here is the other idea that I want to talk about Manpower, not to kill this joke or anything, but if we look at this is a chart of the BLS new jobs added in each month, so or losses. So we can see in 2009 a bunch of losses back in the recession there. 2016, okay. But as we look at 2015 and those 3 blocks that are missing, the 295, 280, 271 in the last 3 months of 2015, and there was a rate hike in there. So we saw those really strong numbers at the end of the year giving us the impetus for a rate hike. I don't think you're going to get that this year, which also kind of helps the idea of a staffing company here in Manpower. Mm-hmm. So I am going to go out here on the limb and say that there is not going to be a rate hike in December. And that for the reason for that is that there isn't going to be these super strong job ad numbers, and it's going to be a little bit less. Manpower is going to be a beneficiary of both of those things. If we take a look at the chart here, the stock has popped recently, and we see a great valuation, 12 times, all 13 times forward earnings. Really like to see that.
All right, do you own either one?
I do not own either one of these stocks.
All right, I'm glad we got that cleared up. Thank you for that, and don't forget, if you go to Zacks.com, you can check out more information on stocks, these two that we talked about, as well as many others there. All you need to do is get over to the homepage and link to it all from there. With Brian, I'm Terry Ruffalo.